Yes, yeah. So, good morning. So, today we'll continue with our final accounts chapter, unit number 1, where we are preparing for trading companies or with adjustments, trading account, profit and loss account and balance sheet. We practiced 2 sums last class. Yes, the extra sums handout. The same handout is provided to you. In that, sum number 2 we are going to solve now. Handout sum number 2 that reads Narayanan, Sri Narayanan. Okay. So let's read the question. First, as usual, first we'll discuss the trial balance items, then we'll discuss the adjustment items, then I'll work out the sums. I'll take you through the sum. Fine. So from the following trial balance of Sri Narayanan, you are required to prepare a trading and profit and loss account for the year ended 31st December 1997 and a balance sheet as on that date. In this sum, if you notice, we are preparing on 31st December, not 31st March, we are preparing on 31st December 1997, right? It's a very old sum. Now let's discuss all the debit balances first. You have stock on 1st Jan 97, which is nothing but what? Your opening stock, January, right? So 70,000 rupees opening stock, where it will go? Trading account. Then comes your plant and machinery. What is that? Exactly. So plant and machinery, asset, balance sheet, rent. Exactly. Rent is your expense, profit and loss account. Then depreciation on plant and machinery. Now, if you notice, generally depreciation will be a part of an adjustment. We did 2 sums. We calculated depreciation. We subtracted from the asset in the balance sheet and also be shown as a expense in the profit and loss account. But in this sum, the depreciation on plant and machinery is given inside the trial balance. If you notice, it is not an adjustment. It is inside the trial balance. So what does it mean? If depreciation is given inside the trial balance, it means it's already been adjusted. What is adjusted? They would have passed an entry depreciation account debit to fixed asset account. That's the entry for depreciation, right? So that entry has already been passed, which means in the fixed assets they have subtracted. In the value of plant and machinery, this depreciation of 5,000 is already been subtracted. So what is the plant and machinery value given to you? 50,000 in the trial balance is after depreciation. You get it? So therefore this 5,000 rupees depreciation we will not subtract it from the balance sheet asset side. Instead where will we show? Only in the profit and loss account. Remember, when any item is given inside the trial balance, it will appear only in one place in the final accounts. So here where this depreciation appears if it is given inside the trial balance, only in the profit and loss account. It will not go to balance sheet at all. Clear? Okay, let's move on to the next item. Drawings subtracted from capital in the balance sheet, wages, trading account, expense, income tax. Income tax is not P&L item. Generally people think that way. We are doing a sole proprietorship company's financial statement, final accounts, right? So any income tax paid or any personal expenditure, say for example, life insurance premium of the proprietor or income tax paid by the proprietor, those are personal expenditure. Remember, in a proprietorship organization, entity, income tax paid, life insurance premium paid on the life of the proprietor is not a business expenditure. It is what? A personal expenditure. Therefore, what do you do with the personal expenditure? Subtract it from the capital, treat it as drawings. You are clear? Any income tax given, any life insurance premium given, see, not general insurance premium, only the word insurance premium is given, it is related to business. Check for the word life insurance premium. If it is life insurance premium, then it will be subtracted from the capital. We will treat it as a drawings. Clear? So, income tax, life insurance premium are treated as drawings. Fine. We will not put this in the profit and loss account. If you take it to profit and loss account, which means you are treating it as a business expenditure. Only the business expenditure will get debited in the profit and loss account. Therefore, please do not take this because it's a personal expenditure of the proprietor. Clear? Income tax and life insurance premium. Right? Premium. Yeah. Then comes your salary for 11 months. Remember, we talk about inbuilt adjustments where it is not explicitly given after trial balance, where inside the trial balance itself we can find some adjustments, right? So here, salary for 11 months. Do you think we are closing the books by 11 months? After 11 months, no. We will always prepare from Jan to December in this given sum, which means 12 months. What about the 12th month salary? You are supposed to pay, but we will pay in the next month, right? So it will be treated as a outstanding salary that 1 month, and I'm supposed to add it, even if it is not given in the adjustment. Remember, we discussed interest on loan already. One sum where Abdul's loan was given, right? Here, salary is given for 11 months. It is an inbuilt adjustment even if it is not explicitly given. You have to calculate 1 month's salary and add it to the respective expense in P&L and put it on the liability side of the balance sheet. Outstanding salary. How do I compute? 11,000 for 11 months. What is for 1 month? 1,000 rupee, right? So 1,000 rupees is the outstanding salary for the month of December. Clear? Go to move on to the next one. Cash. Cash is what? Asset in the balance sheet. Next. Yes. So next you have on the debit side buildings. Again it is what? Asset in the balance sheet. Depreciation on building. We just discussed. Depreciation given inside the trial balance will only appear in profit and loss account. It will not come in the balance sheet. Then comes purchases 3 lakh. Where it will go? Trading account, debit side. Debtors, your asset. Yeah. Then comes your bills receivable, asset. Discount, debit balance. So, discount is allowed. So, profit and loss account, debit side. Carriage inward. Inward. Therefore, it is what? It is a direct expense. Why it is a direct expense? Because the goods carried in, right? When we purchase only, the goods will be carried in. Therefore, it will my direct expense. It will affect my trading account. Next comes bad debts. Profit and loss account, it's a loss. Then comes your sales return, subtracted from the sales in the trading account. Let's discuss the credit items. So you have capital, balance sheet, liability side, wages outstanding. See, generally all these outstandings will be given in the adjustment. But here, it's not an adjustment, it is given inside the trial balance, which means it has already been recorded in the books. You have to give only one effect. The word outstanding is included and which side of the trial balance it is there? On the, so what does it mean? It means it is a liability. Wages account debit to wages outstanding account is the entry already they have passed in the books. Wages account debit when they pass, the 20,000 wages on the debit side already included that 4,000 rupee. That's what it means. Okay. Therefore, the wages outstanding 4,000 is only a liability I am supposed to show in the balance sheet. Don't show it in the trading account. Clear? Next comes your sales. Trading account credit side, sales income. Then comes your creditors. Again, it's a liability. Bills payable, liability. Discount credit balance, which means what? Discount received. When discount is received, what will happen? Treat it as a income in the profit and loss account credit side. Then comes your bank overdraft. Again, a liability. Commission credit means commission received, right? What does it mean? Profit and loss account credit side, income. Next, purchase, returns. So, subtracted from the purchases in your trading account, right? We discussed all the items in the trial balance now. Let's move on to the adjustments. Yes. So, we have 6 adjustments in place. Yeah. Number 1. The first adjustment is stock on 31st December 97 was 96,000. What is that? Exactly. It's a closing stock. Where will you put the closing stock?
The trading as well as balance sheet.
Perfect. Trading account, credit side, balance sheet, asset side, right? Next, second. Stock destroyed by fire was 6,000 rupees and the insurance company accepted a claim of 3,600. Remember, in the adjustment we studied this. Now we are discussing as a part of a sum, right? Full-fledged sum. Now how do I adjust when stock is destroyed by fire? It is my loss. Remember, I gave you 3 set of entries for that. We classified when it is insured, uninsured and all. Here it is insured. And the insurance company is accepting the claim also, but not fully. They are accepting partial claim. Remember, in case we accept the partial claim, how do I treat it? I will treat the loss that is not admitted by the insurance company in the profit and loss account. What is the loss in this sum? 6,000 minus 3,600, 2,400 is the loss that will be charged to my profit and loss account. And what about the 3,600 accepted by the insurance company? I will show that as a receivable asset in the balance sheet. Receivable. Okay, you will receive that 3,600 rupees later. So I'm showing 3,600 as an asset in the balance sheet. Receivable. Then what about the 6,000 rupees second aspect? I'll subtract it from the purchases. Remember, that will never change. Because your goods is lost, it should be removed from the purchases at the cost price. So here 6,000 is the worth of goods you destroyed. So remove that from your purchases in the trading account. So this is the adjustment number 2. Don't worry, I'll give you the working note later. But try to understand 6,000 rupees I'll remove from purchases being a loss of stock, right? Then in that 3,600 the insurance company accepted, therefore I will receive it. So asset. 2,400 is irrecoverable. That's my loss. So debit it to your P&L. Debit to your profit and loss account. Clear? Third one, rupees 1,600 paid as rent of the office was debited to landlord account. Remember, when rent is paid, what is the entry you are supposed to pass? Rent is your expense. I'll not relate it to any person. What do you do? Rent account debit to bank account, cash or bank, right? But what happened? This is a mistake, okay? This adjustment is a error. We are going to rectify in the final accounts. Now, what is the error? Instead of rent account debit to cash account, what is the entry we passed? Debited to landlord account. Okay, let's say landlord is Mr. X. So, Mr. X account debit to bank account. That's the entry I passed. Remember, when I create a new name on the debit, it is what? I'm showing that as an asset receivable, right? Which means it is a part of my debtors list. That is also given. It was included in the part of my debtor. Therefore, in the debtor, I will remove 1,600. He is not my debtor. Okay. He is my landlord. I am supposed to pay rent every month. Once I paid a rent, instead of debiting rent account, I debited the landlord name, Mr. X. Now I am going to rectify this error. This is purely a rectification of error. Okay. Combined with final account sum. The 1,600 rupees will be removed from debtors in the balance sheet. When I write debtors, I will remove 1,600 and also I will be adding it to the rent account in the profit and loss account because it is my rental expense. Because I did not debit the rent account, I have showed less in the rent account. So I will add it to the rent in the profit and loss account. Clear? This is a rental expense, therefore add it to the rent in profit and loss, and it is wrongly debited to the landlord, so I will subtract it from the debtors. Clear? Next, number 4. Goods invoiced rupees 10,000 was sent to customer on sale or return basis. Remember sale or return adjustment where I send the goods on approval basis to my customer, and the customer has a right to either accept the sale or he can reject and return the goods to me, and for that I will give a reasonable time for him. If that happens in the year end, then we have to adjust it. Remember, we studied in the adjustment. How am I supposed to deal with it? 2 times I have to adjust this. Number 1, I have to reverse the sale entry always, because when I gave the goods, how do I treat it? As a credit sale in my books. Therefore, first is the reversal entry. Sales account debit to debtor account reversal entry. So when I pass a reversal entry, how do I charge this 10,000? This 10,000, I will remove it from sales in the trading account because it is not a sale at all. So I will remove it, and I also remove from the debtors in the balance sheet. Remember debtors, now we are discussing second adjustment. In debtors, we removed 1,600 that rent, what has been wrongly debited. And now this 10,000 that is not a sale but I recorded as a sale earlier. Now I am removing that 10,000. Clear? From debtors I will remove 10,000. That's at invoice price, so I removed it. What about the second thing I have to deal with the same adjustment? The cost of goods sold should be added to the closing stock in trading and balance sheet. Remember, stock with customer. We made a note while discussing the adjustment. Now I have to find out the cost of this 10,000 rupees. How do I find out? Read the question further. The customer is still having the right to return the goods, which means awaiting approval. Okay. The rate of gross profit is 1/5 on sale. Do I know what is the sale price? Yes, 10,000 is the sale price. 1 by 5 of sale only is given, not cost. If it is cost, then I could have added in the denominator 1 and then I've done it. But here what? 1/5 on sale, which is 1/4 on cost, okay? Here 1/5 on sale and I know the sale value is 10,000. So what is 1 by 5 of 10,000? 2,000 rupees is my profit involved in the transaction. Then what is the cost? 8,000 rupee. 10,000 minus profit removed, you will get the cost. Cost is how much? 8,000. So what I do with the 8,000? I am supposed to add 8,000 to the closing stock in the trading account. Closing stock, what is the value given? 96,000. To that, add stock with customer 8,000 and show the amount 1,04,000 in the trading account. The same adjustment will be done in the balance sheet as well. Closing stock 96,000, add stock with customer 8,000 and show 1,04,000. Clear? These are the two adjustments that I am supposed to do for fourth one. Okay, very important adjustment from exam point of view. Here in this sum, we covered two important adjustments. Okay, one is goods destroyed by fire and insurance companies accepting a partial claim. Very important adjustment from exam point of view. And number two, the goods sent to customer on approval basis, awaiting approval is also another important adjustment. So both adjustments we are dealing with this sum. The sum itself is very important when you are preparing for this exam. Okay. Shall we go to the next one? Now, write off further bad debts 4,000 rupees and maintain 5% provision for bad debts on debtors. It's a bad debts adjustment. Remember debtors, what is the amount of debtors given in the trial balance? What is the amount of debtors? 80,000 debtors given. We already saw two adjustment to debtors. 1,600 rupees rent that has been wrongly debited. Now I have to subtract it. And also 10,000 rupees goods invoiced but not a sale transaction. So I'll remove it. 10,000 and plus 1,600, 11,600 rupees I'll remove from debtors first before providing for any bad debts. After that I'll subtract even the further bad debts of how much? 4,000 from my debtor. Okay, after removing all these three items, I'll find out what is actually my debtor that I'm supposed to receive. On that, I will calculate the provision for bad and doubtful debts 5%. I'll have a working note, I'll give you. But try to understand, debtors we already discussed two adjustments and here further bad debts is also there. Therefore, three amounts I'm supposed to subtract it before calculating the provision. Because provision is always calculated on amount that is due and receivable from the debtor. First for that I'll calculate that, then I will calculate the 5% provision. Clear? Next, where will I show the further bad debts and provision? I'll also be showing it in the balance sheet. There's no old provision. We saw the balance sheet, trial balance already. In trial balance there is no old provision and there is the old bad debts there. Okay. So old bad debts, add new bad debts, add new provision and show the amount in the trading account. So sorry, profit and loss account. Profit and loss account. Clear? The last one, 1 month salary was outstanding. Even if the statement is not given, remember I told you it's an inbuilt adjustment. So definitely we will do it. But still they gave it as a part of an adjustment. 1 month salary was outstanding. So what I do? Remember 11,000, for 11 months they paid 11,000. So 1,000 rupees is the per month salary. I'll be definitely adding it to the respective expense. And also show that as a liability in the balance sheet. Clear with all these? Yes. Now, okay, in the examination, how to approach this sum? You cannot straight away go prepare trading profit loss account and balance sheet because the stock destroyed by fire, goods sent on approval to customer that requires working note. Okay, you are supposed to show that how the working note will appear and then you prepare trading P&L balance sheet. In the exam, you can write first trading P&L balance sheet followed by working notes or working notes followed by your final accounts. Anything is fine. Okay, it's acceptable. Only thing wherever working note you do, right? The reference number you should put it in the trading P&L balance sheet in the respective place where you're using that working note. We are going to do that. Okay. In the previous sums we solved, the two sums we solved, working note is not required because it's all a direct adjustment. Okay. In that sum, working note is not necessarily that you have to show separately. It's a part of the final accounts itself. We added and subtracted then and there, right? But here in this sum, there are few working notes that is required. Therefore, I'll give the working notes list first. Then we'll go ahead with the final accounts. Shall we? Yes. Number 1. So handout question number 2. We are going to do it. Yes. So in that I am going to give number 1 calculation of amount receivable from insurance company. Okay. So working note number 1, calculation of amount receivable from insurance company. Which adjustment we are discussing? Yeah. So, and insurance company and the amount of loss debited to profit and loss account. See, even though the numbers are given to you, you cannot simply add and less in the final accounts. You have to show the working note clearly before you are doing anything in the final accounts, right? So first, you can make it 2 columns. One is particulars column and other one is an amount column. Okay. In the particulars column, the first line item I am going to write is stock destroyed by fire. So what is the stock destroyed by fire? 6,000 rupees. Then from that you subtract claim admitted by insurance company. How much? 3,600. Therefore, how much is the difference? What is that? Against that, right? Loss to be debited to profit and loss account. So this is the working note that you are supposed to show in the examination. Ma'am, should we write the journal entry? Not required. But I am going to give you a journal entry now, okay? Now why am I giving? Because for your understanding. Later when you refer this sum, you should not get confused, right? So for that, I will give you even journal entries. But in the examination, this working note, this will be enough. This is done. So now what I am going to give the journal entry is only for your reference. In the examination, please do not write and waste your time. Okay, remember I told you time will be a constraint in the accounts exam. Don't write journal entry. What is required is show how much is the stock destroyed, how much is the claim admitted, what is the loss to be debited in P&L. And this is the working note number 1. So I will refer this when I am writing this 2,400 in the P&L and also 3,600 in the balance sheet. Both the places I will refer this working note. Clear? Now, so what is the journal entry? How does the journal entry go? Remember in the adjustment we discussed already. What is the first entry when there is a loss of stock by fire? Loss of stock by fire account debit to purchases account. Right? Then you made an insurance claim and the company is accepting only 3,600. Since we know this now, I can write it as a second entry what? Insurance company account debit 3,600. Okay? Profit and loss account debit 2,400 to loss of stock by fire account 6,000. That's it. Done. We write it as 2 entry. Number 1. What is number 1? Loss of stock by fire account debit. How much? 6,000 rupees is my total loss. To purchases account. I have to subtract it from purchases, right? Therefore, purchases account 6,000, right? This is number 1. What is number 2? I can write an entry for 6,000 rupees because I lodge a claim for 6,000 rupees. But here I know how much the insurance company is going to accept. That is explicitly given. Therefore, I can cut short the entry into 2 entries. Insurance company account debit. I'll write only 3,600 that is going to accept. Then the loss that I'm supposed to charge it to my profit and loss account is 2,400. Then to loss of stock by fire account 6,000. Remember this entry, if you notice, we've already this loss and this loss debit and credit has been cancelled. What's the net effect of the entry? Insurance company account debit, profit and loss account debit to purchases account. That is a net entry actually. That is what we are going to show in the final accounts if you remember. What is that? Insurance company account debit, asset, receivable. Profit and loss account debit, loss in the P&L. Then to purchases account, I am going to subtract it from the trading account. These are the 3 treatment that I am going to give in my final accounts. What is that? Number 1, asset receivable. Number 2, loss. And number 3, purchases I remove. Clear? There is no need for what? Writing 2 entries. I can write also 1 entry. This is for your understanding, I explained it. But do not write entry in the examination. Not needed. Clear? Understood the first working note? Very good. Now let's move on to the next working note. Now, what is the rent amount given? Go check in your trial balance. The rent given in the trial balance. So 3,000 is the rent given in the trial balance. Okay. Now there is an adjustment. What is the adjustment? You have 1,600 rupees that you paid as a rent, but what you did? Instead of debiting rent account, you credited to the landlord account. Sorry, debited to the landlord account. Now, should I show a separate working note for the rent? No need. I can put it in the trading profit and loss account to rent, and the rent wrongly debited to landlord 1,600 and show the amount outer column. That will do. But I have to adjust the debtor. Don't forget that. For that, I'll prepare a working note. Clear? Yes? Now, let's move on to the next one. What is that? Stock with customer. Working note number 2. Yes? Now, calculation of stock with customer account. Stock with customer account in sale or return transaction. Right? Shall we? So, how do I adjust it? I know the invoice value or invoice price is how much? 10,000 given. And then they say profit. What is the profit? 1/5 on sale. And this invoice value is also known as sales value, right? Yes or no? Sale value is actually the invoice value. So 1/5 on sale, which means 10,000 into 1/5, the profit element. How much is the profit? 2,000 rupees is the profit. What I do? So cost of goods sold is equal to 10,000 minus the sale value minus. Remember the cost of goods sold, second formula we studied. What is that? Sales minus gross profit. That's what we're doing here, right? Sales minus GP. So how much? 8,000 is the cost of goods sold. So what am I supposed to do? How do I adjust this? See, for this working note is enough. Examination, this is the working note that is required. After that, you can show this 10,000 that in the 2 places and this 8,000 also in the 2 places. That's how we adjust it. But here, I'm going to give you even what? The journal entry. What is the reversal entry on 31st December 97, right? So, on 31st December 97, how do I suppose to deal with the 10,000 rupees sale? Reverse it. What is the entry? Sales account, debit. Reversal of sales means debit, right? To customer or say debtor. Customer is a debtor account, right? How much? 10,000 I am supposed to reverse. That's the invoice price. The value in which I sold the goods to my debtor, right? So I reversed it. What is the next entry? I am supposed to record the stock with customer 8,000, right? Yes or no? What is the next entry? Stock with customer account or closing stock. I gave you 2 entries earlier, okay? To trading account. This is the entry. How much? 8,000. Clear? So now how do I adjust in the final accounts? This 10,000 I subtracted from sales. Reversal. I have debited. So I subtracted. And also from the debtor I subtracted in the balance sheet. As closing stock alone, what I'll do? I'll be adding it. Stock with customer 8,000 in the closing stock trading and also in the balance sheet I'll add. Clear? Any doubts? Okay. So what else need an adjustment? Very important, the working note number 3. What is that? Your debtors. It needs an adjustment, okay? So what is the value of debtor? What is the value of new provision I have to calculate? How do I present it in the balance sheet? So calculation of sundry debtors to be shown in balance sheet. Okay, calculation of sundry debtors amount to be shown in the balance sheet. How do I show? Now again particulars and amount column. So first under particulars I'm writing sundry data. Please check in the trial balance. What is the sundry data's value given? 80,000. Right? 80,000, right? You can check if you want. See if you notice. 80,000 is the data. To that first what I do? I subtract the wrongly debited rent to landlord. Remember the landlord is a part of what? It's a part of debtor. Therefore, I remove 1,600, subtract it. Then also subtract, remember the sale, just we pass the reversal entry, this entry. I'm supposed to what? Remove it from sales, right? And also remove it from debtors. Debtor has been credited. So now I'm dealing with debtors. Therefore, less what? Less sale of goods on approval basis or sale or return basis. Anything is fine, okay? Sale or return basis. Okay, you can refer working note number 2 out here because I'm using the amount from there, okay? So 10,000. Why 10,000? Because the customer would have sold at an invoice price. So I'm removing it, okay? So after subtracting 10,000, I also have to subtract the further bad debts. Please check in the trial adjustment. How much is the further bad debts?
4,000.
4,000 also I'm supposed to remove. Please take your calculator. Tell me 80,000 debtors value given in the trial balance. From that I have to remove 3 figures. Wrongly debited rent 1,600 and then sale on approval basis 10,000. Then the further bad debts 4,000. If you remove all the 3, how much is the value of debtor?
64.
Actually, you are supposed to receive only 64,400. Okay, 64,400 is the actual value of debtors that you are supposed to receive. Okay, not more than 64,400. Even in this 64,400, there is supposed to be what? A bad debts of how much percentage? 5% given in the adjustment. Therefore, there is a possibility that I am going to have a bad debts on this 64,400. So, I am making a provision for that. What is that provision? New provision for bad and doubtful debts at 5% on 64,400. Remember, always create provision on the amount that is due from your customer. The amount due is 64,400. Therefore, on that you calculate 5%. How much you get? 3,220 rupees is the further provision or say new provision. You subtract that from 64,400. That is the value of debtors you are supposed to show in your balance sheet. Okay, how much?
61,180.
61,180 rupees is the balance sheet value of debtors. Clear? Understood? Any doubt? Very important 3 working notes we prepared. Yes? Now, please go ahead and finish off all the working notes, then we prepare final accounts. So, let's continue with trading and profit and loss account of the same sum, okay? So, now, let's refer the trial balance item by item. We know where the adjustments, we leave enough space for the adjustments, then we will work out the sum. As usual, the same way what we did earlier, right, for the 2 sums. Now, let's discuss the debit side first. What is the debit side item first? Opening stock. So, I opened trading and P&L together. Okay, I am going to use a trading account till here. Okay, then P&L items, if any, I will continue here. Then the next page also P&L I am going to continue. Then I will do the balance sheet. Fine, that's the order I am preparing. So, now the first item in the trading account. What is that? Opening stock. How much?
70,000.
70. No adjustments in opening stock. So, I have written the amount straight away. Right. So, then comes your, yes, I want it. So, you have plant and machinery 50,000. Remember, there is no depreciation in the adjustment. Depreciation is a part of a trial balance. So, it will go to P&L account, not in the balance sheet. Therefore, in the balance sheet, I can straight away write plant and machinery 50,000 on the asset side. Right. Plant and machinery outer column itself I can write because no other adjustments, 50,000. Clear? Go to the next adjustment, next item, rent 3,000. Remember we have an adjustment for rent. Yes. So I am going to prepare trading till here. Okay. So I am putting here to rent account. Okay. and then I'm leaving a space for adjustments. How much is the rent given? 3,000, right? Yeah, 3,000 in the inner column. Okay, I'll add that 1,600 later when we are dealing with the adjustments. I'll do that. Fine. Now go to the next one. I know depreciation on plant and machinery. It's given inside the trial balance. Therefore, in the one place. How much? 5,000. So in P&L account on the debit side too, depreciation on plant and machinery. How much? 5,000, right? Refer the question. It's 5,000. Next, drawings. The next item given is drawing. So in the balance sheet, I'm writing capital. We don't know the amount in a column. Less drawings. What is the amount? 40,000 in a column. That's the next item, right? Now go to the trial balance. The next item, wages 20,000. Remember, wages outstanding is there, but it is not an adjustment. Therefore, it will not affect the trading account. So I can straight away write the amount outer column. How much is the rent? Sorry, how much is the wages? 20,000. So I go to trading account. In trading account, I'm leaving space for purchases. Then coming to direct expenses, I'm writing here two wages. How much? 20,000 outer column. Why I left enough space? Because in purchases we have lots of stock by fire also. Okay, so I left one more space for that line item for that. Next, after wages we have income tax. What is income tax? Remember I told you treat it as a drawing. So in the balance sheet again less income tax. How much?
2,000.
2,000. Again I'll put it in the brackets minus. Okay. Next. After income tax, it's salary for 11 months. It will affect my
P&L.
Exactly. So I'm going to P&L. I'm writing in the inner column salaries 11,000 inner column. Now I'll fill up the outstanding salaries later when come to adjustment. Okay, I've left this space for that. Then comes your cash balance. I'm going to balance sheet on the asset side, leaving enough space for other assets. I'm writing cash in hand. How much?
5,000.
5,000 rupees. Clear? Next. Debit side. Yes. I have buildings. Again, no adjustments. Therefore, I'm writing buildings on the asset side. How much?
1,60,000.
1,60,000. Clear? Next. Depreciation on building. Again, it is what? Inside the trial balance. So, in profit and loss account, I'm writing to depreciation on building. See, if I actually wrote plant and machinery depreciation and I filled up with salary. If you have enough space, you can write next to next depreciation, but it's not compulsory. Okay, depreciation on building, how much? 8,000 outer column. No adjustments, outer column. Right. Next, purchases. Yes, go to trading account. Yes, go to trading account to purchases. How much? 3 lakh.
3 lakh.
Inner column, right? Next comes your debtors, 80,000. Now debtors, since I already have a working note, I don't have to write 80,000 then add less and all. Remember in working note number 3, what we prepared? Just check your working note number 3. Calculation of debtors to be shown in the balance sheet. So you don't have to have a separate working inside the balance sheet. Just take 61,180 to the balance sheets directly. Refer to your working note. What about this 4,000, this 3,220 and all? We'll come back to that. Okay, that we will put it in the P&L account while doing the adjustment. We don't have to do it in the balance sheet because we have already done as a part of a working note. Okay, so in the balance sheet, I'm going to write debtors and refer the working note number 3. Please write this, refer working note number 3 and write the amount 61,000. How much? 61,180. Clear? Now go to the next item in the trial balance. You have bills receivable 30,000. Okay. Next. After bills receivable you have discount debit. So it will come in the profit and loss account to discount. How much?
2,000.
2,000. Then carriage inward. I'm going to write 4,000 in the trading account to carriage. How much? 4,000, right? Yeah. Carriage 4,000. After that you have bad debt 6,000. So in the Profit and loss account, I'm going to write 2 bad debts heading. Okay, how much is the old bad debts?
6,000.
6,000 in a column. Okay, I'll wait. I'll prepare the adjustments. That time I'll put all the new further bad debts and further provision. Okay. Now go to the next item. You have last sales written. How much? 3,000. So buy sales we don't know in a column. Less sales return. How much? 3,000 brackets. Fine.
Rent comes in the trading account. No?
இல்லம்மா இங்க வரைக்கும் தான் ட்ரேடிங் பண்ண போறேன்ல. I'm going to prepare trading till this. This is a P&L, continuation of trading and pay. That's why I wrote the heading trading and profit loss account. Okay. Fine. Next, what is the next item? Debit side over. Go to the credit side. You have capital. So balance sheet capital. How much? Sorry.
2 lakh.
Yeah, 2 lakh. What is the next item? You have wages outstanding. Where it will come? In the balance sheet. Exactly. So wages outstanding and amount out of column 4,000. Next comes your sales 5 lakh. Buy sales 5 lakh. Remember we have adjustments also, right? For that. Yeah. We'll come back to that in the adjustment. Next. Creditors 45,000. Do I have an adjustment? No. So straightly I can write creditors. How much?
45,000.
45,000 outer column. Next, bills.
Payable.
How much?
16,000.
Outer column again because I don't have any adjustment. Next.
Discount receipt.
So, discount receipt is my income. So, I'm going to my profit and loss account. Here, I'm going to bring the gross profit. Then, I'm going to write to buy interest.
Discount.
Sorry, discount. How much?
12,000.
12,000 rupees interest received. Next, I have bank OD, right? Bank overdraft. How much?
9,000.
9,000 rupees in the balance sheet liability side. Next comes your
Commission receipt.
commission receipt again is my income. I'll put it in my P&L account credit side. So I don't have a space here. I'll put here buy commission. How much?
8,000.
8,000 rupees outer column. No adjustments on all that, right?
Yeah.
So done with all the items. We have purchase returns. Yeah. So we have purchase returns. How much?
5,000.
So I less purchase returns 5,000 in a column, right? Yes. Shall we go to the adjustments now? Yes. Number 1. What is the number 1 adjustment?
Closing stock.
96,000 closing stock, and in closing stock we have an adjustment. Remember, stock destroyed by fire. So I cannot put it in the inner column. So buy closing stock. Don't forget anything. Okay. Buy closing stock how much? 96,000 given. Add stock with customer. Okay. Write stock with customer and refer working note number. What's the working note number? Working note number? 2. Right. Working note number 1. Right? No, not 2. Okay. Working note number 2. Working note number 2. How much? 8,000 costs, right? So I'll write 1,04,000 out of all. Clear? Yes. Next adjustment. No, this is not over. Balance sheet, I have a closing stock again. Sorry, closing stock. Again 96,000. Add stock with customer. Working note number 2. How much? 8,000. 1,04,000 out of column. Clear? Yes. Next, what is the next adjustment? Stock destroyed by fire. So I'm supposed to do what I'm supposed to do with the stock destroyed by fire. I'll go to the balance sheet and on the asset side I'll show how much is receivable from the insurance company. Remember number 1 we made a note. So here I'm writing insurance company. Working note number 1. How much? 3,600. Now I'm going to profit and loss account. On the debit side, I'm writing to loss on stock of fire or stock by fire, whatever. 2,400. Working note number 1. Clear? And then go to the purchases and less stock destroyed by fire. How much? 10,000 rupees. Clear? Yes, 10,000 or 6,000, please check. 10,000 or 6,000. In 10,000 are the goods sent on approval basis. 6,000 is a stock destroyed by fire. Okay? 6,000 is a stock destroyed by fire. I am supposed to remove. So remember, 6,000 like 3,600 I'll receive, 2,400 loss. So it's not 10,000, it's 6,000. Okay? Fine. Next, go to the next adjustment. 1,600 from landlord. I'm supposed to remove from my debtors. I already removed in the debtors because in the working note we removed it. Okay. Now only one time I'll do. Where is that? In the rent I'll be adding it. Yeah. So rent wrongly debited to landlord. Okay. I'm writing it short. You can write it briefly or fully. Depends on your space. Okay. 4,600 outer column. So we done 2 times this adjustment. Debtors part we've done in the working note. Clear? Go to the next one. Goods sent on approval basis. What I'm supposed to do? Working note number 2. So right in working note number 2, what have you done? We calculated the invoice price, we calculated the cost price, and also we show in the sales we subtract, in debtors we subtract, right? Shall we? So go to the sales and subtract the approval basis. Okay, goods sent on approval basis, and this is 10,000 actually, right? Fine. Now what am I supposed to do next? After subtracting this 10,000 and also in debtors I am supposed to remove that, right? And in debtors we already removed in the working note. So one adjustment is over. What is the next adjustment? The 8,000 rupees sent on approval, the cost will be added to the closing stock account, like stock with customer. I've added that in both the places. Where? In trading account and also in balance sheet. We dealt along with adjustment number 1. Remember? Yes. So we have done this adjustment. Next, go to the next adjustment. What is that? Bad debts. So in only profit and loss account we have to adjust because in the balance sheet working note debtors we dealt with. So now in the trading and profit and loss account, okay, in P&L I am going to deal with it. I know old bad debts 6,000 rupees. Now add new bad debts. How much?
4,000.
4,000 rupees. And add new provision for bad and doubtful debts. How much? 3,000.
220.
So adding this number, I don't have a whole provision to subtract. So only add these 3 numbers and show the amount outer column 13,220. Clear? Any doubts? Alright. Now in the second place, this 4,000 and 3,220 is already been dealt with because in debtors working note we have done. Clear? You can refer the working note number 3 if you want to. And also here I am going to make a reference working note number 3, right? 3. Working note number 3. 3. Fine. Working note number 3. Especially for this 3,220, I have to mention the working note. Clear? Yes. What else adjustments is there?
On
Salary, right? So salary outstanding, we already calculated 1,000 rupees 1 month. Okay, you write 1 month. And here itself you can calculate 11,000 divided by 11. Fine. How much? 12,000 outer column. Fine. Then where will I show this?
Liabilities and balance.
So salaries outstanding 1,000. We dealt all the adjustment in 2 places now. Shall we go ahead and tally our trading P&L balance sheet? Come on. First we'll do the trading account. Take your calculators ready. I'm going to make a total here and write to gross profit here. First, okay, let's do this. Sales 5 lakh less 3,000 rupees sales return, approval basis 10,000. So from 5 lakh remove 13,000, how much you'll get? 4 lakh 87,000 rupees. Okay, plus closing stock 1 lakh 4,000. Adding both you will get 5 lakh and 91,000. Okay, then on the debit side, you have opening stock 70,000, purchases 3 lakh minus 11,000, right? That's 5 and 6. So 11,000 removed from 3 lakh, you get 2 lakh 89,000 rupees purchases. Now calculate the gross profit for me. 5 lakh 91,000 minus minus 70,000, 2,89,000, 20,000 and 4,000. So how much you get?
2,08,000.
So 2,08,000, 208. Okay, that's your gross profit. So what I do here in P&L account, remember profit and loss account, I'm continuing here itself. Okay. So I have 2,08,000 gross profit, then discount income received 12,000 on the credit side, and also have commission income. So now make a total of this, then calculate what is the net profit, please. Yes. What is the total first on the credit side? I have 2,08,000 plus 12,000, 2,20,000, 2,28,000. Right? Now from 2,28,000 you have to remove all the expenses. Okay, remove 4,600 rent expense. After that subtract all these expenses. Depreciation 5,000, salary 12,000, building depreciation 8,000, discount 2,000, that is 13,220, loss on stock by fire 2,400. So these are all the items I'm supposed to subtract as an expense from 2,28,000 total income. So how much you get a net profit? 1,80,780 rupees is my net profit. Please calculate, that's my net profit. And after that I'll carry this amount to my balance sheet, add net profit
1,80,780.
Now first let's calculate what is the net amount here. 2 lakh minus 40,000 minus 2,000 income tax, add 1,80,780 profit. So how much you get? You get 3,38,780. Now all the other amounts we filled it. So just calculate the total of the balance sheet. So 3,38,000 plus 4,000 wages outstanding, creditors 45,000, 16,000 bills payable, 9,000 overdraft and 1,000 rupees salaries. 4 lakh? 4,13,780. 4,13,780. Please do on the asset side as well. You have 50,000, 1,60,000, 61,180, 30,000 bills receivable, 1,04,000 closing stock, 3,600 insurance company receivable, and 5,000 cash. Did you get that? Yes. So the balance sheet is tallied. Now please go ahead and work through this sum. Yes, let's continue. So we are going to continue with the next sum. Okay. So far we did 3 sums in the handout. Question number 1, 6 and 2. Now we are going to do sum from your study material. Okay. From your study material, chapter number 7, unit number 1, we solved I think 1 or 2 illustrations already. In that illustration number 9 we are going to solve. Okay. It's also a preparation of final accounts. Shall we? Now Shri Mittal gives you the following trial balance and some other information. Now trial balance as on 31st March 2022 is provided to you. Okay. So you have, like, let's discuss as usual all the trial balance items one by one, and after that we'll discuss the adjustments, then we'll work out a sum, right? So now first look at the trial balance. You have capital 8,70,000. It goes to my balance sheet liability side. Then comes purchases and sales. Remember, separate items they will give, right? Purchases separate line item and sales separate line item. Here they've combined purchases and sales. So which is your purchase?
6 lakh.
The amount on the debit column is your purchase and amount on the credit column is your sales. So purchases debit balance, sales credit balance. Don't forget that. So purchases 6,05,000 and sales is 12,10,000, right? Next comes your opening inventory. Where will you take the purchase and sales? In your trading account. Then comes your opening inventory. Where does it take? Goes to? Again trading account, right? Opening inventory. Next, trade receivable and trade payable. What is receivable? 90,000. Balance sheet asset side. What is payable? 1,70,000. Liability side of the balance sheet. Then comes your 14% bank loan. Loan taken at the year end. Remember, inbuilt adjustment. When the date of the loan borrowed and the percentage is given, we have to always calculate the inbuilt adjustment. And very specifically, they mentioned the loan was taken at the year end. What does it mean? You don't have to pay any interest on that loan because it is only borrowed on 31st March 2022. That's the assumption. Clear? So no need.
The next year.
No need to put interest on the current year. We will pay interest next year. That's okay. But not in the current year's amount. Right? So 2 lakh rupee only in the balance sheet 2 lakh you show. Clear? And next is the overdraft. And again overdraft is taken when? Year end. No need to pay for overdraft interest. Okay? Only show the overdraft in the balance sheet liability side. Clear? What is the next one? Salaries, expenses, profit and loss account. Next comes your advertisement. Again is your expense in the P&L account. Other expenses, profit and loss account. Returns. What is that return they're talking about? Exactly. Return inward, return outward. Okay. So which is given on the debit side is your return inward. Sales return 40,000. Which is given on the credit side 30,000 is your purchase return or return outward. Don't get confused. Okay. There's always a chance of you getting confused out here. This 40 and 30. Which you subtracted from your sales and which you subtracted from your purchases. Remember, opposite to sales is your debit balance, so 40,000 subtracted from sales. Opposite to your purchases is your credit balance, 30,000 subtracted from purchases. Clear? Next, furniture, asset, building, asset, cash in hand, asset. Very important next 3 items you are going to talk about. What is that? You have GST here. Okay. Remember in the journal chapter we studied GST. I explained what is IGST, CGST, SGST. Yes. We have all the 3 GSTs here, but we don't have all the output and all the inputs. You have few items in your balance sheet. How do I deal with these 3 items? Okay. Now let's look at the first item. What is that? You have an input CGST of 9,000. What is input? It's your asset. You paid 9,000 rupees worth of CGST on the purchases made by you. That is what is that 9,000. Okay. Then again you have an input SGST asset. How much? 9,000. Which means while procuring some raw material or some goods, your company paid 18,000 worth of CGST and SGST together. Fine. And there is an output IGST where I made a sales. Okay. When I sold goods, I did not sell it to the person within the state. I sold to some other person in the different state. That is why I had what? IGST output. How much I have? 15,000 rupees I collected from my customer. Remember this 15,000 I am supposed to remit it to the government minus the credit what I have. 15,000 I will remit it to the government provided if I don't have a credit, fully I pay. If I have a credit, I will subtract the credit available and pay only the amount that is due to the government. Here, ma'am, I have IGST output, which means I have to pay interstate with like different state transactions. I have to pay GST to central government. But the input I have is not IGST, right? Can you see that? The input value I have is not from IGST. What I paid is what? CGST and SGST, 9,000 and 9,000. Can I adjust the output IGST against the input CGST and SGST? That's a question. Actually, this sum, you are supposed to deal with that. Now, how do I deal with it? Number 1, remember, when I have output CGST, input CGST, I will always adjust within that respective GSTs first. Say for example, output CGST will be first adjusted against input CGST. Okay. Then output SGST will be first adjusted against input SGST. Then if I have output IGST, that will be first adjusted against input IGST. First. Okay, now here in this sum I have output IGST, but I don't have input. Am I right? I have output 15,000, but I don't have an input. Am I right? So now can I use the input available here 9,000, here 9,000 is available and here 15,000 I am supposed to pay. Am I right? The 15,000 I am supposed to pay here, can I adjust against input available in the other 2 GSTs? You can adjust, yes. First, IGST, remember, it's completely, we are supposed to pay to central government, right? So therefore, this 15,000 will be first adjusted against input CGST. Then number 2 against input SGST. Okay. First, to the extent available in the input of CGST, I'll adjust because that is due towards central government. Out of this 15,000, I'll use 9,000 from IGST fully. After using 15,000, 15 minus 9, how much more I need? Only 6,000 from input SGST I need. But whereas how much is available in this thing? 9,000 is available. From 9,000 available, I used 6,000. Therefore, still I'll be having what? A balance of input SGST. Now, if you see, this output I don't have to show in the balance sheet because it is adjusted against what? Adjusted against the input CGST of 9,000 rupee. And also second, I have adjusted 6,000 rupee towards the input SGST. So what will come in the balance sheet is only the 3,000 rupees input SGST that will be shown in the asset side of the balance sheet. Why asset side? Because the amount available in the balance is input. What if it is output? I will show on the liability side. Okay, I am balancing it, I am netting it off. The netting works this way. First, I will adjust inputs of the same category against the output of the same category. Number 1. Fine. It should be adjusted that way. And after adjusting from the same category, still I have output, but input is available in different categories. Can I adjust? Yes, you can adjust. Okay, that's what we have done here. First available is output, IGST only. There is no input IGST at all. So can I adjust against the input of CGST and SGST? Yes. But to the extent of CGST, use it fully. Okay. Then go to SGST. Ma'am, can I use this 15,000, 7,500 from each? There's a possibility, right? You can think that way. 7,500 from CGST I'll adjust and 7,500 from SGST can I adjust? No, you cannot. You can adjust only what? You can adjust only to the extent of CGST input available, fully you adjust. Then any leftover balance will be adjusted against the input state government GST. First finish off the central and central, then come to the state. It works that way. Clear? Understood? This is the only adjustment in this sum. If you understand that, that's it. The sum is over. So now we discussed all the GST values. Now one adjustment given in this sum. What is that?
Closing stock.
Closing stock 1 lakh. We'll take it to the trading
As well as
balance sheet asset. Now prepare final accounts. Come on, let's prepare final accounts for this sum. Yes, I'm not preparing. Let's see what is given out here. Sorry. Yeah. Yes. Very simple. Only closing stock is the adjustment. Okay, I am not preparing trading P&L balance sheet. I am just discussing from what is given out here. You just have to prepare on your own. Okay. Here is your what is this? So come on, trading account first. What are the items? Look at the question. So you have opening inventory, you have purchases less returns, you have sales less returns, and then you have closing inventory. Closing inventory 1 lakh adjustment. So by applying that, you will get what is the gross profit? 6,23,000. Then bring that gross profit to your profit and loss account. Then comes your salary, advertisement, other expenses, no adjustments. Okay, only expenses given I have entered. And then I got the net profit of how much? 1,83,000. Then that's it. We are going to prepare balance sheet. In balance sheet, only one part that I have to adjust. What is that? My GST part. Okay, and remember GST, we just had a discussion. What is the discussion? We just have to show only the input SGST 3,000 rupees in the balance sheet asset side. That's it. No other GST will be shown. Okay, netting it off. Now see, balance sheet. Look at the balance sheet liability side. You have capital, net profit. Okay, added back, and no drawings also, no need to subtract. You have loan, trade payable, overdraft, and on the asset side you have building, furniture, trade receivable, closing inventory, cash balance, and one important, what is that? The input SGST part, how much? 3,000 rupees. That's it. The other GST will not appear in the balance sheet. Understood? For that, in your book, they also gave the note, working note. You also have to do the working note this way. Okay? See, the working note output IGST liability is paid by utilizing input CGST of 9,000 first, then input SGST of 6,000. Thereafter, leaving a balance of how much? Input SGST 3,000, that is reported in the balance sheet. You can write a working note as simple as this. But how do I show in the examination? That is also given to you. Okay. Okay, that's not given to you, but you can do it this way. In the exam, you can write this working, okay, as we did in the here. So first you can make a chart, output available, input. So first output IGST 15,000, okay. Output IGST 15,000, from that you remove these through, then show 0. Fine? Yes, do that way. Then do this sum. The sum with trading P&L balance sheet, and only one working note, that is only for adjustment of your GST part. Clear? So come on, do it. See, you guys can show the working this way, okay, for your GST after your trading P&L and balance sheet, how it has been presented, and leaving a note for that, okay. After writing a working note this way, then you prepare trading P&L balance sheet, you will get full marks for this sum, okay. Come on, do it. So guys, we close the class with this illustration number 9, and we'll continue in the next class. Thank you.